Hello, my name is John Gattuso, and today I will be discussing the consequences of the economic crisis that began in 2008. Specifically, I would like to address the credit crunch and how it has affected everyone. Access to credit has allowed many to own things he or she could not buy outright, but the abuse of this risky practice has in part led to the current economic crisis. The cost of homes, cars, and starting new businesses are often more than the savings of most Americans, so the easy solution is to take out a line of credit and pay the loan back over time with interest. The problem with this is when the people that issue these loans have no money to loan, no one can purchase these high-priced items, and those who will sell them also suffer. The sellers of these items are not the only ones suffering, though. The entire economy is suffering because without access to credit, small businesses cannot be started, expanded, and hire additional workers, possibly workers who were previously fired during the lowest points of recession. Without these new businesses, the economy has limped along just trying to maintain and not get worse. In these terribly uncertain times, prospective homeowners and home sellers are being severely crippled by the lack of credit available to the general public. Americans that would have qualified for loans under the much stricter loan standards of the pre-Reagan era cannot attain loans today because, despite their qualifications, there is simply no free capital to be lent out. This in turn hurts the sellers because there is no market for their product. The credit crunch has not only affected the phenomenally large purchases, but has also affected the way in which most people purchase things today, with credit cards. Most have at least one credit card and use it to buy everything they need in a month and then pay off the balance at the end with interest being accrued on the remaining unpaid balance. The credit crunch has caused many of these people to be denied credit cards, which makes it harder for them to manage their finances. The problem of credit is evident, but how to correct the problem is debated heavily. Several measures have been taken, and it is believed by most the bailout of the gigantic financial conglomerates to free up lines of credit was necessary. Unfortunately, when this $900 billion bailout, financed by the American taxpayers, was implemented, credit was no easier to come by. Companies like Goldman Sachs caused this crisis by falsifying credit ratings and purchasing bundled subprime mortgages in the hopes that many risky investments bundled together would somehow be less risky than a single one. They could not sub these troubled securities to any other bank when the economic crisis hit, so they were extremely close to insolvency, because the companies were also very highly leveraged and had a high debt-to-equity ratio. These financial conglomerates were deemed too big to fail because it was feared that if they did go bankrupt, they would take down the entire U.S. economy with them. This belief caused the bailout to be put in motion, and the U.S. government, on the taxpayers' dime, bought the troubled securities that could not be sold. This bailout essentially rewarded those who caused the crisis, but it was a necessary measure to ensure the health of the economy. The slow, widespread deregulation of the financial industry allowed these corporations to become heavily leveraged, so when their investments turned sour, the corporations were left with far too much debt and comparatively little equity to cover these debts, which led to insolvency in most cases. But regardless, the legislation should have been in place to prevent this, and now that the crisis has spread to other sectors, it is predicted that the credit crunch could cost as much as $1 trillion. The credit crunch has cost the U.S. economy inordinate amounts of money, and has set our country back many years economically. The credit crunch has been felt not only in the financial sector where it originated, but it has spread throughout every sector because each needs money to operate. It has crushed the dreams of those in the market for a house and has put countless people out of work because companies no longer have the means for expansion. It is evident that credit is necessary.